Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, December 2nd, 2022. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Bit of selling pressure here in the pre-market trade after the NFP report was released. 260K jobs versus 200K expected, so better than expected, but still a big swing push down. This could, if a strong enough low develops here below the 8-period average and inside the Pima trigger zone, this could develop into a failed new low outside reversal up if price can get going back above the previous session's low. So that's going to be something to keep an eye on. If price can get back above this previous session's low, we could actually see a very bullish development where we could potentially close on highs. Right now this market has been trending up. After pullbacks we've seen strength. And right now, this market remains inside a higher value relationship on the new PivotBoss pivots for the month. You have this pivot range here, higher value relationship pulling back into that range. The first pullback to begin the month will likely be defended for an attempt to go higher within the current trend. So right now, we have quite a bit of selling pressure. But if price is able to recover the previous session's low, that could get interesting for what could be a bit of strength heading into the rest of the day. So keep an eye on the previous session's low. If we take a look here at the NQ, this one also seeing quite a bit of selling pressure right out of the gate here off the NFP report release. A big push to the downside, but again, the 8-period average here, an upward sloping Pima trigger zone, not quite as bullish as what you would see in the ES or the YM, but still an upward trending Pima trigger zone after the change of bias here in mid-November. So right now, big swing push down. This previous session's low is going to be very important. That's 11,940. If price can't get back above that zone, then perhaps we start working our way down to 11,500. 11,500, the next support level down. So right now, keeping an eye on the previous session's low, quite a bit of selling pressure early. If it can recover that zone, it could become an outside day up in the best case scenario. If we take a look here at crude oil right now marginally higher, inside day, narrow range of 47% of ADR. This one getting very close to the previous session's previous month's midpoint here. In the previous session, we've had a really solid 4-day rally here. This 4-day rally comes after Monday's rejection of the key range low, 76.25. Monday, we mentioned if this thing can stay above 76.25, it opens a path to 85. 85 is the midpoint of the key range. We're still working our way higher. Right now, inside day, sitting just above the 8-period average, building energy here. Even if we sit here the whole day, there could be a failed new low Monday and continuation up toward that 85 target. Once we get to 85, or should we get to that target, it's a major separator between the upper distribution and the lower distribution. So it's a moment where crude either turns back down and stays within the lower distribution, or we see some sort of transition day here that takes us back up through the prior distribution. Something like this, where it takes us back to the top of the distribution. But as of right now, 85 is that near-term target. Once it gets there, we'll see what happens here. But at the moment, very decent continuation. You have an inside day developing that's building energy. We do have a lower value relationship here, so any push into this zone could be seen, again, as an opportunity to bring it back to the bottom of the distribution. Do we see a rejection now, or does it need a little bit higher before we get that? We'll see what happens. If we take a look here at gold futures, gold right now pulling back after a tremendously bullish day in the prior session. One of the things we mentioned early on, which was in October here, if price can push through this prior pivot high at 1680, it opens up 1740. If it pushes through 1740, it opens up 1820 to 1830 as that next zone up. Very similar to what happened last time. And on this recent pivot low here, it gave that last push to get up into that target zone. Today's high is right at 1870, so it came just shy of the 1820, not quite into the 1830 just yet, but it did push and close beyond a composite VWAP for the year and also the 200-day moving average. The last time prices were near that zone, they were offered, as this market has been mostly trending downward throughout much of the year. So back here, that's the last time we tested that yearly VWAP. The 200-day was right in that zone as well, and both of those here offered. Last time here it gets very close. They're both up here, drops away from it, and now back to that zone yet again. So can this market continue to push higher into 1830 or even beyond? Beyond 1830 gets you into about 1880 as the next zone above, and perhaps a bit beyond that. So right now, watching to see how price responds here to composite VWAP after this strong move up. At the very least, we could be stuck in this new distribution between 1740 and 1830 as we trade inside this range. So to go higher within the range, you may come all the way back to 740 and stay in this range here for the foreseeable future. If we take a look lastly at, let's look at YM right now. The YM is down over 1% here. This has been the strongest of the equity futures here, a big time double bottom here with a return all the way back to 34,500, even beyond that 34,700. This is an even bigger move than what we saw in Q3 during the rally. You can see an even bigger move on the sell-off in Q3 from here down. That was huge, and it's already gone outside that range as well. So in just the first 2 months of the quarter, we've seen quite a bit of range. And because we've seen so much range, the expectation may not be to extend that range even further. It may be to pull back into the range and trade back down within this range. And if that's the case, we have the previous month's midpoint, 33,160. See VWAP here, and those could be magnets down below. So again, if price is not able to recover the previous session's low price, we could be looking at a continuation downward toward the midpoint of the previous month. So far, we've already seen an early reaction at the high close. If you're going to reject this zone, then you tend to go back to the midpoint, which, given the uptrend, could be an opportunity for bulls to defend and keep it in this range. So right now, keeping an eye on the previous session's lows for the ES and QYM. Failure to get back above those zones extends the move to the downside. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Happy Friday, everyone. Please be sure to like, share, and subscribe, and have a fantastic weekend. I'll see you in the trade room. Take care.